The average health insurance premium costs in 2023 were $8,435 annually for single coverage. And then for family coverage, the annual cost was around $23,968 a year. Yeah.
Choking. I'm like choking. Welcome to Under the Coverage.
During each episode, we interview people, sometimes it's just each other,
who spend their working days focused on health benefits and health care.
As consumers, we want the same thing you do.
We want the entire system to be less complicated.
Our guests share insights about how they navigate healthcare and the health benefit systems. I'm Jolene Myers.
And I'm Sara Flusky.
And we're ready to lament,
complain,
empathize,
and maybe help a few people. Jolene, today it's just us, just you and me. Insurance premiums are not a real exciting topic, but we spend a lot of time thinking about this because of our work. But we also have benefits. We have health plans and we have families. So I think we're doubly invested in kind of understanding where you're spending money on deductibles and copays and trying to get to the bottom of why it's so expensive. Let's talk about it.
Yeah, I think one of the things that we do well, I mean, we've worked with each other for several years now, but we share nerdy information that we read. And it's always an interesting topic, I think, more than ever, just because when you're dealing with healthcare issues or you've got a family to worry about and, you're thinking about the paychecks coming in and out, basically. It's an important topic to talk about. So we're constantly sharing nerdy research with one another. And I think the first thing we've got to talk about for people listening who might not be as familiar with the industry is what an insurance premium is, right? So we throw the terms around. We've talked about our glossary of terms that's on our website. It's the amount of money that individuals or businesses pay to an insurance company in exchange for coverage, right? So when you hear that term, that's what that means. So for health benefits, most people contribute funds toward their premium monthly or as a part of the paycheck every week or every other week. So your premium payment is separate from other costs you might have, like copays or deductibles.
Right. That's that monthly or bi-monthly, however often you get paid. Usually that is just directly withdrawn from your paycheck. Prepayment not something you pay afterwards, usually comes out up front. And at open enrollment, that's when you find out what is the cost going to be to me for this year. And actually, I think that's years ago now, somebody did the math for me. Well, actually, they did the math for me 3 years in a row because I asked, why do you continue to enroll in a PPO plan? So my PPO plan at the time was, I want to say it was $250 a pay period. So if you say it's $250 a pay period and we get paid every 2 weeks, it's $250 times 2 times 12. I got to do it that way because my math is not so great. So 24, however many pay periods you have, if you do that math, you're spending that amount of money no matter what. Doesn't matter, copays, all that other stuff aside, that's the cost just to have the plan. For us, the premium amount was so much less for the high deductible plan. Somebody said to me, if you took the money you're spending on that PPO and instead redirected that into an HSA, I know there's a big chunk you have to pay for a high deductible plan first before those copays and things start to kick in. But if I moved my money, my $250 per pay period, into the HSA instead, how long would it take me to start saving and redirecting that money? So I feel like that's some of the math that people can do up front when they're looking at the plan options they have to say, how do I use services? What are my needs? Because maybe the stability of that $250 a month and the copay arrangement just makes more emotional sense.
Yep.
I need that predictability versus the, uncertainty of a high deductible plan. But there's some math you can do up front at open enrollment to determine which is the right way for you to move from the start, no matter how much your plan costs.
And I think it's important so who sets this premium amount, right? So the premium or cost of the plan is impacted by legal and regulatory requirements. One of the research foundations that we share information back and forth from is the Kaiser Family Foundation. So according to them, the average health insurance premium costs in 2023 were $8,435 annually for single coverage. So it comes out to be about $700 a month too. And then for family coverage, the annual cost was around $23,968 a year, which
Such a
is, yeah,
choking. I'm like choking.
which comes out to about $2,000 a month.
Yeah.
$2,000 a month for family coverage.
Which
And
with a
right,
bi-weekly pay is $1,000 out of your paycheck. And when I said the $250 per pay period, when I say that was years ago, I think that math is probably close to accurate because premiums increased 7% last year and 22% over the last 5 years. And if you've had insurance longer than that, it's 47% over the last 10 years.
It shouldn't make sense. But what I mean is, I remember you sharing that story about when you kind of did the pros and cons list.
Yeah.
And you and I have been working together for more than a decade.
Right.
So that timeline makes sense. But still, it's not as, it's just, it makes me sick.
It's so much money. It's so much money. And you probably pay a little less than that now if you're in a high deductible plan, and you probably spend a little more than that if you're in a PPO plan where it's that fixed amount and then you have the copays with your plan. But 1 in 5 adults with insurance report that they are not getting care they need because of the cost between the flat out plan costs, but then adding in those copays and things. And that's a lot of deferred care that can ultimately lead to more expensive care, because if you delay the care you need or the visits, seeing the providers that you need to see to get things checked out, the longer you wait, I mean, I've learned my knees are not getting better. So time doesn't equal better. It's just deferred. And I can appreciate deferring because of cost, but it can lead to costlier care down the line. It's just so hard to balance, right?
It's very hard to balance. And I think about, you hear friends and family say, oh, I went to the grocery store and I spent $100 and you can get one bag
of groceries.
So it's like, do you go get your teeth cleaned or do you get groceries for your family? I mean, that's the real situation that a lot of people are in. And it's sad that this is where we are. I mean, we got to hope that it's going to get better, but that's just it. I think, when you're in the moment and you've got to make those decisions, you're not thinking about the timeline down the road and how that could cost you more, right?
In 2008, the Mental Health and Addiction Parity Act came into play. And I remember prior to this that benefit plans were allowed to have different cost sharing or visitation limits for mental health or substance use treatment compared to like your medical benefits. So if you had physical therapy, they might cap out physical therapy at 10 visits, but maybe mental health visits to a therapist might be capped at 5 or something. So with that Mental Health and Substance Use Parity Act, now those have to be the same. So if you allow 10 physical therapy visits on a plan, you have to also allow 10 visits for mental health. So now there is parity or, equal amounts if you're going to add a limitation to a plan. So some of the additional cost comes from doing things like that. We're requiring more of plans than were required before, but at the same time, you can appreciate the need to offer that because mental health is part of physical health, right?
Absolutely. And just some more Kaiser Family Foundation stats. So in 2022, 33% of adults said they delayed or skipped dental care, which is often a separate benefit for your medical plan. Don't even get me started. That SNL skit. Molly Shannon. There's a GIF out there somewhere we can use. The dental insurance thing drives me insane. It always has. But 33% of adults. And your teeth are so important, right?
This is not easy for anybody. There are some foundational rules that have come into play that raise the cost of care. So making sure that people have access to a wide variety of benefits. That's a good thing, but there's a cost to that. There's generations of people that are just getting older. And as you get older, you need more services. So aging populations cause prices to rise in general, uncontrollable, right? And then there's new technology and new medications, and things are always evolving and improving. So with earlier detection, you might get services sooner than you used to previously, because now we we know more, so we can do better or serve people better faster. So with all that evolving technology and new medications, and there's a cost to all of that. So we want to be better and feel better, but as we're learning more, those new things are expensive compared to, older ways of treating things. So that adds to cost. Mm-hmm. So in our next episode, I know we're going to talk about one of the new regulations. It's not new anymore, but that required plans to offer certain preventive services at a $0 copay. In our next episode, I know we'll get into what's zero. So even at its base, if you're just paying for your plan, always go for your $0 services.
Absolutely. All right.
We'll talk next time, and we'll get down to the zeros and go from there.
Sounds like a plan.
All right. Thanks, Joe.
Yeah. Thanks, Sarah. This podcast was brought to you by Nova Healthcare Administrators.
Do you have a question or a situation you'd like advice about?
You can find us on Twitter at UNDR The Coverage.
If you're into email, you can reach us at podcast@novahealthcare.com.
Don't forget to leave a review, give us a like, or subscribe, but more importantly, share.
We'll find the insiders. You share it with the outsiders.